Good morning, good afternoon, good evening, wherever you're watching me today. My name is Peter Ads. Welcome back to Invest with Peter Ads. So today I'm going to be talking about 10 things or 10 reasons why most people won't make money in the stock market. Well, you may have been hearing that most people will be saying, well, I've been there a couple of years. I lost all my money. I invest in some random cryptocurrency. I lost it all. Don't do it. Don't go into stock market. You're going to lose your money. Yes, that's true. They're actually telling you the truth. Please don't invest in the stock market. Well, I can actually tell you 10 reasons why you will make money in the stock market, right? If you stop doing all these things I'm going to mention today. 10, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. 10 reasons why you will make money in the stock market if you don't follow these steps, right? First thing is the head mentality. All right, before I go into that, please, if you see me for the first time, click that like button. Subscribe to my channel and also put your comment down below. I'll be there to answer your question and anything you have in stock to ask me. All right. So now, one, don't follow the head mentality. What's the head mentality? Well, if you're just trying to invest in the stock market or you're thinking about coming into the stock market, well, there's this thing we call head mentality. Head mentality is where if you're using a social platform like eToro, trading 212 and all of the ones that you guys use in America, if you're using those ones, you got so many random people coming on board and typing in, oh, buy this now. This is going to, go to 50% in a couple of days. And people start jumping on and all these, platform that they try to hype some company or cryptocurrency. Do not follow the hype. We're almost in a bull market at the moment, though we're not in one at the moment, because you might be thinking, are we already in a bull market? No, we're not. We're almost in one. Once all this stuff at the platform is settled up, all these rate raise, geopolitical issue and inflation and all that, once the dust settle, we're going to see who is swimming, naked, right? So that's what it says. So now, the head mentality is when you follow some people to invest in what you don't know anything about. That happened in 2020 after the Rona crisis. People were buying random company. I bought some random company as well. I still have them in my portfolio. Some are minus 70, some are minus 60. I'm not, planning to sell them because I don't check my portfolio. I don't sell a company at loss. I don't invest to lose money, right? Warren Buffett said, do not lose money. Second law of Warren Buffett, don't forget rule number 1, do not lose money. So if you don't want to lose money, do not follow the head mentality, right? Number 2 is only invest in company you can monitor and follow. If you check some people's portfolio, they got like 100 plus company that they have invested in. Tell me how you're going to do your due diligence on 112, 140 company. It's not possible. You're deceiving yourself, right? If you tell me you monitor them, you are just lying to yourself, right? I understand. There's no way you will follow up on 140 companies. There's no point in investing. Warren Buffett probably have not more than 15 companies in his portfolio and is making millions every year from this company, paying dividends every time, once in a month, quarter, or once in a year. So if you know what you're doing, like me now, well, I'm guilty at this point as well. I've got like 44 companies in my portfolio and, but the top 10 ones are the ones, I actually follow up closely. I invest in them heavily. The other ones are just like a trading and all that stuff in those ones. So I don't mind. If you're coming into the stock market or you are already invested in the stock market, please invest in company you can follow up. You can do your due diligence on. You can understand what they're doing. The companies you can actually tell somebody if they're one key about the company, why you are investing in the company, and what's your projection for the company. If you can't do all that, please get out of that. You're going to lose your money. Number 2 is invest according to your age. Well, if you're in your 20s, you're still lucky. You still got a lot of time ahead of you to invest in whatever random company you want to invest in. But if you're in your late 40s, from mid 40s upward, you want to be specific in the companies you want to invest in. You don't want to be investing in a random cryptocurrency or a random company that somebody told you that you don't know anything about, or random, some startup companies that you don't even know if they're going to survive. No, you want to stay clear of those companies and you want to buy established companies like Microsoft, Apple, Chevron for dividends, and a couple of bonds in your portfolio, and companies that can make money for you, where that, well, if I invest in this company, I'm going to be getting dividend every month, dividend quarterly or yearly. That is what you want to be investing in. So according to your age, you need to look at what you want. If you're in your 30s, where you can still play around, but be very careful not to get burned, because that's number 2. Then number 3, okay, that's number 3, right? So then number 4, stick to the winning companies. In your portfolio, you need to have a winning company. Like mine, I've got Microsoft, I got BTC, I got Apple, I got Nvidia, I've got AMD. I've got my winning company in my portfolio. So you must have some winning company. And guess what? Once you have your winning company, do not sell them, because you may think, oh, I don't know if it's going to go down. Dollar cost average into your winning company when the stock is down. And when we run into a bull market, you're going to be happy that you've done so when other people are running away from investing in those companies. So stick to your winning companies, and then you're going to be happy you've done so. So always stick to your winning companies. Don't sell out. When you want to take profit, I'm not saying you should not take profit. Take profit at the appropriate time, but always stick to your winning companies. Then number 5, invest in what you use on daily basis. If you are holding an iPhone and you don't, have Apple in your portfolio, well, tell me the story. Tell me why not. Okay, I mean, if you use Samsung or some other company, like Google and all that, and Google Pixel, and you don't have a Google share in your portfolio, what you're doing. So always invest in what you use on a daily basis. If you work in the office, you use computers, you use Microsoft software. Why not investing in what you use on a daily basis, right? So whatever you use on a daily basis, if you work in a bar, why not invest in the companies that supply you the drinks in your bar? Because this is your niche. This is what you can tell people about. This is what you do every day on a daily basis. This is what you know. You don't need anybody to convince you, because these are the things you consume, you use, or you sell every day. So invest in what you use every day. If you don't, you're going to be losing money in the stock market, right? So the next one is don't over leverage. I can't overemphasize this, guys. Don't over leverage yourself. So many people have X5 leverage, X4, some portfolio even have X10 leverage. What are you doing with CFD? CFD is like using a credit card to buy that car, right? You want to drive a Benz, you use your credit card to buy a Benz. Guess what? You're going to be paying multiple of what the car is worth, right? So CFD is like, it's good for the platform, but it's very dangerous for you as an investor, right? Stay clear of leverage. Don't use leverage. Don't over leverage. People use this during the bull market. When everything is going up, they just want to pull like a £10,000, $10,000 in this company because 2 days ago it's gone up like 50%. So you want to make triple of that money. If anything happens, you may lose your 10,000, and you're still gonna be owing the platform some money to pay back, right? So stay clear of leverage if you don't want to lose money. But if you want to lose your money, it's your choice. Just over leverage yourself. That's it. So next one is patient. Wow. We always say the patient dog is the fattest bone, right? Patience is a virtue in the stock market. When everybody is panicking, when the roof is falling apart, when everything is going down, when YouTubers are running all over the place to bombard you with random information that you don't need, please be still, right? Keep still. Don't let what you hear around you, don't let the noise around you push you to go sell your stock at the wrong time. I know so many YouTubers, once any news pops out like that, they start telling you, oh, this. You remember the news when they said Gary Gensler has been sacked, or Gary Gensler has been, has resigned. That was a rumor generated by an AI. And guess what? The YouTubers jump on the, on the news and start feeding you with wrong news. Please be patient when the news about the roof is falling off. Patient, so that you don't sell your stock at the wrong time. Well, those who are like, okay, Gary Gensler has been sacked from SEC, and people were like, oh, thank God. And, stocks were just going, crypto was just going up like that. I was like, nah, I've not confirmed that. I'm not buying anything. So when the news broke that, oh, it was a lie, that's when I swing in and I bought a couple of my crypto. That's when always wait until when the bad news come in. That's when you buy. Don't buy in the bull market. Don't buy when the news is good. Wait until dust settle and there's a bad news in the market. That's when you swing in and win big. Because so many people will be like, oh yeah, that's when. See, people that buy on the good news always end up losing their money. Don't always buy on the good news. Wait until bad one comes in. Then you swing in. And when the market sweeps around, you're going to be on the other hand, smiling, patient, is always good if you have one. So that's that one. So stop checking your portfolio. That's another one. Stop checking your portfolio every minute. I'm guilty of this one too. I can't just stop myself from looking at my portfolio every couple of hours, right? It's not really good for you, because at some point, if any news break now and you're gonna be like, oh, what am I gonna do? Like, hasty decisions start coming in that you need to sell out now. Some people start telling you in the platform, oh, if you don't sell out now, you're gonna lose all your money. This is what's coming up. Always leave your portfolio alone. Don't check it every hour. Some people even said that I think Vanguard came up with this, that the best performing portfolio belongs to those people who are dead, or those people who probably forgot that they have an investment with them. Because nobody checks this portfolio. If somebody is dead now and has like $200,000 in Vanguard and nobody knows about it, that portfolio is there, nothing is being changed, nothing is happening. The portfolio perform better than someone who's going there every hour, every minute, trying to change, twitch, and move something around. Leave your portfolio alone. Stop changing stuff. Let the process work for you. Don't always check it. That's another one. So another one again. Sorry, I need to check my list so that I won't be talking rubbish. So handle your portfolio like a business, right? I handle my portfolio like a business, even though I don't have a business name for this portfolio, but I handle my portfolio like a business because I don't want to lose money. Anybody tell me, one who's an entrepreneur, that the business you invest in, do you intend to lose money? Like, no, nobody invests to lose money. I want to make money. I handle my portfolio like a business. I run it the way I would run a business. That's why before I make any move, I think about it. I sleep over it before I make any move. And that's what is probably been sustaining me. That's one of my methods of handling my portfolio. Always handle your portfolio like a business. If you don't, you're going to lose all your money in that portfolio. That's it. And the last one, number 10, be careful who you follow on social media. Right. So many people follow random YouTubers and they feed them with, random news. You listen to like 10, 15, 20 YouTubers. This one is saying A, this one is saying B, another one is saying Z, another one is saying Z. These investors, these YouTubers, if you ask them, some will tell you, I'm a trader. Some will tell you I'm a short-term investor. Some will tell you, well, I'm a contrarian. I go against the market. Some will tell you I'm a long-term investor. So if you're a long-term investor, listening or watching a swing trader or listening to a contrarian, then you're going to get confused and sell out at the wrong time. Always understand who you're listening to or who you're watching and follow the process accordingly if you don't want to lose money in the stock market. Well, that's it for today, guys. 10 reasons why most people want to make money in the stock market, and 10 reasons also why you can make money if you don't do all those things. I'm Peter Ads. Thank you very much for watching today, and I will see you on the next one. Please subscribe to the channel. Bye.